I am the no-nonsense accountant making finance simple. Today, we're unpacking the UK tax system, in plain English, without the jargon, and yes, without putting you to sleep. I promise this won't feel like HMRC is reading you a bedtime story. Let's jump in. Who actually collects tax in the UK? Taxes are collected by HMRC, His Majesty's Revenue and Customs. Think of HMRC as the UK's financial referee. Except they blow the whistle when you forget to pay them. Their job: collect taxes, pay certain benefits, and generally keep the money side of the country in order. The UK has two main ways to collect the tax. Direct taxes. These are taken from your income or profits. Basically, money you meant to keep. Example: income tax, national insurance, corporation tax, capital gains tax. Indirect taxes. Taxes on spending. Money you didn't mean to spend but spent anyway. The biggest one is VAT, which is silently added to most goods and services, such as Amazon purchases, eating out, and your phone bill. The UK uses a progressive tax system. The more you earn, the more you pay per slice. Not your whole income, just the bit that falls into each band. Think of it like climbing stairs, except each step takes a little more of your money than the last. The first slice of your income, which currently is £12,570, is not taxable. We call this the personal allowance. Employees usually get taxed automatically through pay as you earn. So most of the time, the tax deducted just magically disappears from your payslip, like socks in a washing machine. But if you're self-employed, welcome to self-assessment. The do-it-yourself version of tax. You register with HMRC. You report your income and allowable business expenses. For clarity, you're taxed on your profits, not your total sales. HMRC calculates what you owe for both income tax and national insurance. Then you pay your bill, occasionally with payments on account, which is HMRC's way of asking for next year's money in advance this year. Self-assessment is also required if you have rental income, big investment income, or anything HMRC didn't already tax at source. Non-UK residents can also use the self-assessment process to file tax returns in the UK on their income, or gains that the UK has the right to tax first. National Insurance, NICs, is basically the UK's version of Social Security. It funds state pensions and certain benefits. Employees have it deducted automatically. Self-employed people pay through their tax return. Think of NICs as the membership fee for the future you, the one who hopefully gets to retire someday. Time to talk business and investments. First, capital gains tax. Important note, this is not just for investors in suits. Anyone can have capital gains if they sell something for more than they bought it for example, shares, crypto, a second property, even art or collectibles. Yes, your childhood Pokemon cards might now count as assets. You only pay tax on the profit, and only above the annual allowance. Corporation tax applies to businesses on company profits. If you invest in shares, you may pay dividend tax on income received. And you may also pay capital gains when you sell investments. VAT is the hidden ninja tax. VAT is added to most things you buy. Businesses collect it for HMRC, they're basically tax middlemen. It's the tax that you don't see, because prices usually include VAT, but you can definitely feel it. The UK tax system has a simple framework, but the details can feel like someone sprinkled tax rules onto a spreadsheet from the top of Big Ben. For example, most people get the income tax personal allowance, dividend allowance. There's also a capital gains allowance. Selling personal items has a different reporting limit. HMRC can even collect some untaxed income through your payee tax code, as long as it's reported in the self-assessment before the end of December, so you don't always need to pay a separate bill. Add to that things like the trading allowance for small side hustles, and rent-a-room relief if you rent out part of your home. You can see why the system feels complicated. The good news is, most of these rules exist to reduce the tax you pay, once you know they're there. This brings us to the end of this video, and the UK tax system, in under 5 minutes, with 0 yawns and hopefully 0 trauma. If you want deeper dives into income tax, self-assessment, capital gains, or anything relating to UK taxes, drop me a comment below. And of course, hit like and subscribe for more no-nonsense content. Thank you for watching.